Hello and welcome to another update video about Polkadot. Here, this scenario worked out. Yeah, we talked in the last video about the situation that we could have peaked here at this local low at the wave C and would be coming down ideally in another low or making another low in wave 5. And we zoom in a minute to take a look if that is now complete or not. At the moment, I'm still inclined to count this bullish. Again, we need to be on the side of caution at the moment in the crypto space. It's far away from certain, yeah, and please, if I tell you carefully bullish, don't try to say or understand that I'm telling you here with full confidence that we are going up. I can't do that because there is no evidence for that. We can currently, again, be carefully on the side of caution. And what I do in these videos, I also show you the lower level wave counts frequently. That is, first of all, to educate how to label charts by using Elliott waves and how to determine targets and so on. And to be fair, they often work out. And of course, not always, because it just doesn't, and markets sometimes just do their own thing. But what I repeatedly say in these videos is that the lower level wave counts, they are more fragile. I could also just take a look at the daily chart here, and I would be telling you exactly the same story that I told you already in January. Now, this is super boring and doesn't really educate you. And therefore, we are looking at the lower level wave counts as well, especially also on the hourly or 2-hour chart. In the end, it doesn't make a difference if I look at the hourly or the 1-hour chart. The waves are basically the same. To be fair, the 2 hours is a really good time frame to analyze charts from with an Elliott wave point of view. But yeah, please bear in mind that these lower level waves, they just sometimes get invalidated, or actually quite often. That is part of the game. That's part of investigating the higher level wave counts, because we're using the lower level waves to verify the higher level structure that is evolving. But that's just a little bit of a remark in the beginning. Yeah, just that you understand that what I'm telling you here is not the absolute truth or what is definitely going to happen, because in the end, we only know waves after they happened. And then, however, these assumptions, they will give us price targets for the next wave and price forecast. Same story with support and resistance lines. If a support line is breaking, of course, you assume you go maybe to the next volume spike or next key support level. So you always only use, of course, previous price history. What else can I use? We do that in all areas of life, really. When we make any assumptions, we can only base our assumptions on what has already happened. Okay, so I'm still inclined to count this as a wave 1 because I can, yeah. We count this as a leading diagonal in a wave 1 where we saw the WXY pattern as the wave 1, then came down in a 2, moved up in a 3, 4, 5. Up here we talked about an upcoming correction. Now that was admittedly stronger than expected, yeah. But however, we then adjusted to this new scenario, and I told you in previous videos we're gonna come down lower. What we shouldn't do ideally is to go below this section here. We should not drop below $6.40. So this would not be good because that would also be below the wave X low, and that is basically the last structural support level before we get to the low at $6. From an Elliott wave point of view, as long as you're protecting the $6 level, we can assume this is just still a wave 2 correction. But below the wave X low, we also have to put more emphasis on a possible bearish scenario. At the moment, this currently just works out as forecasted, that this was an A wave, a B wave, and we're now in the C wave. In the C wave, we've got 5 waves. And in the last video, I told you here, we're probably going to turn around in a wave 5 down, which then also happened. Yesterday, Powell's speech was the catalyst. Sometimes you need a catalyst. Sometimes it takes a bit longer without a catalyst, and so on. And in this scenario here, we could possibly have done the 5 waves already. In the 5th wave, the 5 waves. So we need to be on the lookout for higher levels now. There is no evidence yet, but I can count this 5th wave already as complete. Yeah, so from the high here, we can count this as a wave 1, this as a 2, this as the 3 possibly, yeah, or the 3 here, it doesn't really matter, and 4 and the 5. That is possible. That's possible. So, however, for the first, let's say the first indication that we are indeed going up would be a break above the $7.14 level, that small swing high here. If we break that, I think we can get fairly swiftly all the way up to $7.67. And when that's broken, we should really move higher. So in a bullish scenario, you would now expect that we are getting up in a wave 3. Now that wave 3, first of all, needs to get above a lot of resistance levels that you can see here. Always those swing highs here, the wave 2 high or the wave 4 high are very relevant. Here, the 50-day moving average at $7.80. The wave B high will be the next key level at $9.18. And then, of course, here, the high of the wave 1 at $6.69. And in a wave 3, we should take out all of these levels. But first of all, we need to get there. That will take a bit of time. Still, as long as we stay below this wave 4 high that I just talked about here at $7 and where was it, $7.14, the downside pressure is still there, and we have to be on the lookout first of all for lower prices as well. So we now need to wait for price confirmation either way, and then we can focus on the next steps. Yeah. So to the upside, evidence is only obtained if we break above 714, and as long as this stays intact, we haven't made a higher high. So I have to assume that we will go lower, which would then possibly take us in the next step to that $6.50 level, the wave X low. And from here, the price then has a next chance to move up. So all the requirements for this correction are complete. We just now need to wait for the right moment that the market is turning around. And yeah, that's it basically. Yeah? And even in a bearish scenario, I would expect some kind of a recovery now here. Yeah, because we have done quite a strong move down. Yeah, you can count this also as a 5-wave move down. And in a bearish scenario, this could be the wave 1, and we'd now be waiting for a wave 2. You also have a bullish divergence on the RSI on the 4-hour chart, which is quite meaningful, quite a strong one actually, making a higher low on the RSI and making a lower low on the price chart. You have bullish divergence also on the MACD. There is also often a signal that this move down was finished. If we take a look at volume as well, you can see that we're at a critical level here. We're at a volume spike level, and that's a key support level, the $7 level. Ideally, we want to hold this level and turn around now. Dropping below the $7 level will only make it more difficult to reclaim it and recover it. And yeah, again, if we drop below that level, first stop would be the X low, the wave X low at $6.50, where we have another chance to get higher. But then again, it will get tough to get through this $7 spike again. So that's a key level to keep an eye on. Okay, and that's my update about Polkadot. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.